All right, let's go ahead and get it knocked off and start it out with what's coming. Number one, China's recovery. Very important topic. A lot of people don't want to talk about it. They want to just say, ew, China. But if you like money, I would pay attention. So this is the SPY. As we all know, the 396 gap did fill today, leaving about 7, 8, or 9 left remaining, all the way down to COVID levels, which are about 279, floor being 212.72. This is the Hang Seng. As you all know, this gap here, this little wick right here, filled a gap from 2016, which you can't even see in the chart because it's so far back. Now, here's the SPY with the gaps highlighted on the chart. Take note. Now, here's the Hang Seng. As you can see, the price for the SPY, the gaps are located below. The gaps for China are located above. So that's why I like to call it the yin-yang. But anyways, let's keep moving along here. The Financial Stability Report came out today from the Federal Reserve System. And basically this is a little rundown. This is their little intro message. It says the Federal Reserve System is the central bank of the United States. It performs 5 key functions to promote the effective operation of the U.S. economy and, more generally, the public interest. Yeah, right. Fed Reserve conducts the nation's monetary policy, which is what no one wants to pay any attention to promote maximum employment and stable prices in the U.S. economy. But what they don't mention is that they're actually incorporating monetary policy with this one here, 2 in 1 stone. They also promote the stability of the financial system and seek to minimize and contain systemic risks through active monitoring and engagement in the U.S. and abroad, promotes the safety and soundness of individual financial institutions, and monitors their impact on the financial system as a whole, fosters payment and settlement system safety and efficiency through services to the banking industry and the U.S. government that facilitate U.S. dollar transactions and payments. And lastly, they promote consumer protection and community development through consumer-focused supervision and examination, research, and analysis of emerging consumer issues and trends, community economic development activities, and administration of consumer laws and regulations. Yippee. So this came out today. This is the May 9th, 2022 Board of Governors of the Federal Reserve System Financial Stability Report. Now, this is figure A and B. I'm not going to read all of this. I'm just going to go over the relevant stuff to China because this video is about China. Now, this is the share of world gross domestic product in figure A. Figure B is credit to the non-financial business sector. What I want you to pay attention to is the paragraph below. In the past few years, the Chinese government has tightened regulation of property markets, including the imposition of new constraints on home purchases, banks, property sector exposure, and mortgage lending in some markets. This is what I was trying to tell everyone about last year when Metzler showed up. In August 2020, regulators announced further measures directly focused on property developers, progressively tighter restrictions on borrowing based on specific prudential limits for leverage and liquidity, commonly known as the 3 red lines. See, I don't make this shit up. So you're having a Fed document reference a Chinese policy document. I mean, they don't just make this stuff up. So what does this mean? It means in August 2020, regulators announced in China they were going to be deleveraging, while we, on the other hand, over in America, had SLR and the SEC relief active to allow for sister funds to lend to each other, which is why you see ETFs of ETFs inside ETFs, because they're all lending to each other and they're allowed to do so because of the SEC regulations and limits that were basically lifted right before April of 2020. And that was before Gary's time, mind you. So Gary, if you're not aware that that exists still, I would end it. But anyways, 3 red lines. Now this is what's important. In the longer term, these constraints should help keep leverage in check and increase the resilience of the property sector and the financial system. So that is why I'm against the China going bankrupt narrative. It's all bullshit to keep you away from this opportunity. But it is what it is. Listen to me or listen to the news. It doesn't bother me which one you pick. Now, this is where it gets interesting. This is figure B, fall 2021, most cited potential risks over the next 12 to 18 months. Number 1, persistent inflation, monetary tightening. Number 2, COVID-19. Number 3, China regulatory and property risks. Number 4, U.S.-China tensions. Number 5, cryptocurrencies and stablecoins. Number 6, climate and weather. Now, here's what you see. China's growth slowdown is the least of their concern, but at this time in fall 2021, China regulatory and property risks were of the top 3. And then you had U.S.-China tensions at number 4. Well, take a look at the spring of 2022. Now, look what took the number 1 spot. Russian invasion of Ukraine is more is higher up on this chart than persistent inflation and monetary tightening. Now, risk asset valuations correction? Hold on, let's go back a second. Are they telling you right here? China regulatory property risks, and then we see risk asset valuations correction. Because guess what they did during SLR when they leveraged everything? They bought up risk assets. That's why they're holding them all in their books and portfolios. Now, my question, China's growth slowdown still at the bottom, but even more importantly, China-US tensions went down, COVID went down, and at the very bottom, real estate correction. It doesn't say meltdown, it says correction. All the way at the bottom. Because that's all it's going to be. We're going to do exactly what China did on their end of things over here, and it's just a process. You're going to get those people that come out and say, the market's going to crash, but it's not. It's going to cycle down. We have so many things working, and my job is to help everyone understand the different pieces of this moving puzzle. So this is video 1. China, okay, it will recover, man. That's not even a Chinese accent, but just, it's going to happen. It will happen. I guarantee you it will happen.